Kingdom's Wealth and Wisdom, brought to you by Petra Worldwide. Here is Nathan Weaver.
Greetings and welcome to Kingdom's Wealth and Wisdom. I'm Nathan Weaver, founder and executive director of Petra Worldwide. In the pursuit of absolute sovereignty over your estate, clarity is your friend and ambiguity is your enemy. Out in the marketplace, I see entrepreneurs and high net worth individuals consistently falling into a dangerous trap of financial nomenclature. They sit with their accountant, they sit with their lawyer, and they say, I want to evaluate the tax impact of my living will. How is it going to impact my estate with the IRS? There is a massive disconnect when this occurs. Many sophisticated individuals mistake a living will for a living trust. They treat one as interchangeable with the other, and they are completely different with completely different jobs. Today, we're going to clear the fog, correct the misinformation, and look at the true operational reality of a living will. Let's start with the definitions. A living will carries exactly zero tax impact, zero income tax benefit, and zero estate tax consequences. It is not a financial instrument. It is not a vehicle that can hold real estate, corporate entities, or brokerage accounts. A living will is a legal healthcare directive. It is a document that explicitly dictates your medical wishes if you become incapacitated, comatose, or otherwise unable to communicate your wishes to your loved ones. It is not going to dictate how your assets are distributed by any means. And because it deals purely with the biological directive and carries no financial authority, the IRS does not recognize its existence. It does not require a tax ID number, it does not file a tax return, and it has no bearing on your brackets for capital gains or multi-generational wealth transfers. So if a living will has no tax footprint, why does this misconception continue to exist? It's because people confuse it with a revocable living trust, a completely separate tool for estate planning and engineering. When you establish a revocable trust, you are moving assets into a legal structure that will bypass public exposure and legal cost of probate.
Pastors and financial leaders, do you need expert accounting or tax help? Do you have payroll or 1099 questions? Do you need a ministry expert to help you acquire real estate for your next project? If the answer is yes, yes, and yes, visit petraworldwide.org. Petra Worldwide has been strengthening ministries to transform humanity since 2007. Visit petraworldwide.org or call 855-481-9095.
But even with that, let's bust a major industry myth. A standard living trust does not lower your current income tax bill or your estate taxes either. Neither one. The IRS views a living trust as a pass-through grantor entity. During your lifetime, the assets inside that trust still tie directly to your personal Social Security number. All interest, dividends, business profits, and capital gains flow straight onto your personal 1040. It provides privacy and seamless asset transfer at death, but it does not act as an immediate tax shelter. So while a living will has no direct tax impact, a conscientious steward understands the indirect financial value as an operational risk mitigation tool. When a high net worth individual falls into a medical crisis without a living will, the family collapses into chaos. Siblings battle in court over medical decisions, guardianship proceedings can drain your treasury, and other complications occur. I'm Nathan Weaver. Lead with confidence, live with integrity, and build something that lasts.
Listen every day at 4 p.m. for Kingdom's Wealth and Wisdom, brought to you by Petra Worldwide, strengthening ministries to transform humanity. On the web at petraworldwide.org.